Welcome back, and it's over to Manisha. Manisha, what's the big commodity of 2025 that you're tracking?
Well, it's day one. The Asian markets are just opening, and most of them are not even opening right now. But, much of the cues would come in from 2024. And, well, yes, there's a lot of uncertainties as we get into the new year as well. So one thing that I want to put on table clearly is about the dollar index. And this has been the best year since 2015 when you look at the dollar index move, which has been up by 6.5% in the previous year. And when you look at 2025, the first day that is, we are holding above 108 onto this one as well. Well, there are expectations of pro-growth, inflationary policies from Trump when it comes to taxes and tariffs, and that perhaps could keep the dollar index surging higher. We've heard a lot of experts telling us that 110, 111 is where this rally perhaps could peak out. So that is still 300 points on the higher side from here on. Well, I want to talk about the crude oil prices because we've started 2025 on a positive note. 0.25% on the higher side, but the volumes are quite thin. But when you look at 2024 and what we are carrying from that one is the fact that you've seen second year of decline in 2024. We saw the prices decline by 3% in the previous year. Also, when you look at the Chinese demand manufacturing data for the month of December has been on the positive side. Is the reason you've seen last 2 weeks actually positive for crude, and is the reason that much of the loss that we were looking at for this year seems to have gone down as well. At one point in time, we were trading 9% down on crude, but we've closed the year down by just about 3% there. Well, it's positive Chinese data has done that trick, but the markets will watch out for a lot of things in 2025. It is going to be about risk of excess supply, geopolitical tensions, Trump's oil policy, and add to that the fact that the Chinese demand is still not clear, and then you have higher supplies coming in from US and many of those non-OPEC countries as well. But within this space, it is about the U.S. natural gas prices, which gained quite strongly. It was the best year since 2016. We've seen nearly 56% of gains come in. Today, we've seen 7% of a decline, but that's about profit taking. It's winters. January is going to be colder, and all of that perhaps will lead you to buying opportunities there. I also want to talk about precious metal prices because we've seen gold and silver actually do better than various equity indexes as well. Not so much the case for platinum and palladium, but when you look at the gold prices, this is the best year since 2010. Silver is put in the best yearly gains since 2020 as well. So it's been a good year in that sense for gold and silver prices, also given the fact that we've seen all-time highs, and you could be looking at further all-time highs in the year 2025. When it comes to the base metal prices, ferrous metals did not do well. We've seen 15% of decline in iron ore and a 22% of decline for steel. Copper, while has gained 5% for the year, but when you look at the last couple of weeks, it has continued to decline. It's trading at a 3-month lows right now, and the markets are looking at copper prices coming off 30% from its all-time high that we saw in 2024. So it's going to be tricky for metals. Buying continues in precious metals, though, is what the cue is as we step into the new year.
Okay, thank you very much for that overarching wrap, Manisha. And here's wishing you as well a great 2025 as we